Hey, what's up, masters, entrepreneurs? Welcome to another episode of the Persistent Entrepreneur Podcast. Today, we're with Ryan Richards with Northpoint Mortgage. What's up, Ryan? How are you, man?
Doing well, Dave. How about yourself?
I'm doing great, brother. As I said earlier, beyond my weird stiff neck, but other than that, life is good, man. I can't complain.
Yeah, it's a
And
busy spring, at least for people like you who are moving and shaking and taking care of their people. So that's a good thing.
yeah, man, just keep showing up. That's all I do. I just keep showing up. I, as soon as we sell something, we're like looking for the next, right?
Well, it
Can't slow down.
sounds easy in principle, but it's a proven difficult task to be consistent. So
Well,
separates
it
you.
you know it is. It's like you just don't ever. I don't know. Maybe I'm just never satisfied. I don't know if satisfied is the right word, but you like I think what happens in our industry. I mean, you're in the mortgage industry. I've been in real estate for 24 years. There's a lot of agents, so they'll find a deal and then they stop doing any lead generation or anything that brings more deals, and they spend all their time and energy on that deal for the next 45 days. Then they got to go find another deal, which then creates this huge gap because it takes another 30 to 45 days to close. Where me, as soon as I find a deal, I have people handle that and I just move right to the next, finding the next deal. And so I think the top performers, that's how they roll, which I know you're one of those as well. So
Yeah, you have to have those systems in place. Otherwise, it creates that push pull. You get these. You spend so much time pulling all these deals in, helping clients, getting them under contract, and then you spend too much time pushing them out, so you get that void. And it's hard. But if you don't have the systems, you inevitably, fall into that trap. So it's a
yeah,
hard thing
you're
for a lot of entrepreneurs, aside from real estate as well, is to get those systems in place almost when you're not busy, so you're ready for when you do get busy.
well, I think the word you said earlier is consistency. Just consistently on a regular basis, be having conversations with people, talking to people, and generating new business. Like you cannot stop generating new business, no matter how much business you have in a pipeline. And like you said, it's systems. It's the systems, man. So I see you guys on social media, just crushing it with whatever you're doing. You always get deals closing and this and that. So I appreciate that. You're local to where I am. I reached out to you and I said, hey, let's do a podcast. So here we are, man.
Yeah, glad we came on. Glad we came on. That's part of the consistency. That's a good thing. You see me. That means it's working.
Absolutely. And so you're a loan originator, or you're the actually branch manager, right? I'm assuming you're a loan originator as well,
Correct. Correct.
with Northpoint Mortgage. You guys focus on residential financing, but you're also the host of a podcast called The Real Estate Lens, which you share experiences and insights as a loan officer as well as a active real estate investor. Also, the co-host of How to Buy a House. What is it? How to Buy a House class dash, is that RI Rhode Island?
You got it. You nailed it.
Okay. President and co-founder of 400K and wait,
Connect.
maybe I know, I think I messed something up. Hold on a minute. Yeah, finish your bio for me, man. Tell us who you are. Sorry about
No
that.
worries. No worries.
All the words are kind of going together here in my maybe it's my neck,
I was going to say,
stiff neck thing.
your next got you off course there.
Yeah, it's got me off focus, bro.
Yeah, happy to introduce myself. So I'm an originating branch manager at Northpoint Mortgage. So we're based out of Westboro, Massachusetts. The primary focus is residential financing, which is anything 1 to 4 units. Myself, my team are licensed all across the East Coast, so anywhere from Maine to Florida. We can certainly help out and guide our clients through their purchase process. And then, as you mentioned, some of my other things that I do to share some value with my network is I have a podcast I run, The Real Estate Lens. It's bringing on other investors, other real estate focused entrepreneurs, business owners to talk about what they're seeing in the market, what successes they're having, some losses they have, and really give people an inside look on what's going on in the real estate market and different real estate avenues. I think that's often not something people fully grasp if they're not familiar with real estate, just how many different verticals and channels there are. So that's one thing I focus on is diversifying who I bring on, everyone from attorneys to lenders, real estate investors, even social media, content, talking to my video team about what people are doing in the industry to be successful. So use that as a platform to do that, and run a networking group based in Worcester. Similar mission behind that is get more involved in the community and help people get connected, to expand their networks. And similar with the other items you mentioned there. And education is a big focus of my business. So, the culmination of these few things definitely helps me do that as a platform. Having the podcast to really get into the nitty gritty, having the networking group to make some face-to-face connections, and then obviously social media, to stay top of mind and keep the people in the know of what's going on.
Good stuff. So, of course, my landscape, or I don't know if you can hear the background or not.
No, I can't.
No, good. Okay, good. Because I can hear it. It's right outside my window. But hey, you know what? That's a good thing, right? Because I used to mow my own lawn until I realized I could find. Well, this is a long time ago. I've been using landscaper for at least 10, 12 years. But I used to go every Saturday and mow my lawn, Richard, and it would take me, Ryan. I mean, it would take me maybe a total of 2 to 3 hours to, from the whole setup to the. And then I found out, 10 years ago, now it's more, but I for like $55, I could pay somebody to go out and handle my whole lawn. And then I could take an extra 3 hours on a Saturday, twice a month. And so, and the reason I share that is because I feel like so many people in the real estate business, they're just stuck. That's where they're stuck, in the minutia of the $15-20 an hour stuff that they're doing. So they're not out there generating new business and finding new clients and customers. And
And
so,
I bet you haven't looked back since. You probably don't miss mowing your lawn. And that's, obviously, an analogy that goes across the board. There's so many of those tasks that once you actually do offload them, you have like a sigh of relief of, wow, I can't believe I was doing that before. No
yeah.
way I'll go back. And it's actually a concept I talk about a lot on the podcast and my podcast. It stems from a book I read, actually, which is How to Buy Back Your Time, by Dan Martell, which talks about that exact principle of identifying tasks within your life that you can offload for a small portion of your earning potential. So they actually put a number to it. And it's something I've been doing on myself as an audit to see what tasks am I doing that I could reasonably offload to someone else to allow me to focus on, more high value tasks. And it's a hard skill to implement. I'll say that. It's easy to understand, but the implementation is difficult. I think you're muted, Dave.
So, it's funny. I muted myself because of the lawnmower. But I do have, see, this is my little book right here. It's How to Earn More Money Working Fewer Hours in Real Estate. And it's actually one of the stories I talk about in here is, I never talk about this book, by the way. I always talk about my other book, the Sales Playbook, but it's an important book, and it's not just about real estate. It's about life and all the things that so many of us entrepreneurs do. We're stuck in the weeds, and because of it, we're not making an impact. We're not making money. We're just grinding by and surviving to the next deal. So to that point, Ryan, I want to toss it back over to you. But what was it that caused you to go into the real estate space and become an entrepreneur? But also, I know you're in the trenches as well at your office. So talk to us a little bit about that.
Yeah, happy to. So my origin story, it actually ties back to my family. So my family's always been involved in real estate. My father and both my parents owned a mortgage company for about 20 years in Westboro. So mortgages, real estate was always a conversation that was around the kitchen table. And I
Now,
now
was
have,
it Northpoint, the same company, or was it a different company?
it was not. It was called Key Home Mortgage.
Key. Okay, got it.
Key Home Mortgage. So they owned that from 92 to 2012. So growing up, that was always a conversation I heard around the table, different aspects of real estate, My mother and father worked together. My dad was originating. My mother was his processor underwriter. So it was always a conversation around the table. And what's funny is if you have family in a certain industry, you either have one of two ways of looking at it. I'm super excited to take over the family business, or I'm going to do my own thing. So in the early stages, I was back and forth between, I knew I liked real estate, knew I liked finance, but didn't know exactly what I wanted to do. And through doing, different, exploring different real estate internships, real estate job opportunities, I ended up stumbling back into loan originating, and I found a love for it. I enjoy finance, enjoy numbers, and ever since I started, even in college, I got licensed as an originator and was working, summers, winters, working on loans. So once I really discovered the investing side, that's what really got me, fully immersed into real estate. Was just the potential of what this can do for not only your future, but building legacy type wealth for generations. And that something I think a lot of people, or most people, everyone should aspire to do, is leave a lasting legacy with your family. So that's what really got me involved, and started investing in real estate a couple of years ago, and something I continue to look to do in the future.
And when you say legacy type wealth, explain that to our listeners. What do you mean by that?
Sure. So the concept of building generational wealth is it's leaving behind assets and a financial estate that benefits generations to come. So your kids' children, future lineage way down the line. I'm not looking at, and I think it's an interesting perspective to bring to business, because when I go wake up every day, I don't think about, I need to go try to make X amount of dollars to, buy a new car or provide my kids a college fund. Of course, those are on the list. My overarching objective, my why, is to leave my family lineage better off than where I started. So when I wake up every day, what can I do so that in 5 years from now, or 50, well, that's too long, I'm shorting myself here, say in a couple hundred years, my family still has some of my legacy left behind. Whether it's in the form of a real estate trust, hopefully there's a family bank account, by then, right? Go to the family bank for a loan. So I think that's where that comes from, is leaving behind a legacy that lasts for generations.
I love it. I'll be honest. I've had a lot of people on my podcast. I've never had anybody talk about 150 or a couple hundred years out. So that's amazing, brother. Congrats on that. I love that.
I appreciate it.
Yeah. I mean, it's hard for some people to think, 2 years out. No, never mind a couple hundred years. So that's awesome. So let's talk about the current market, man. It is, for a lot of people, I hear it's challenging out there. What are you seeing? What are you hearing? On the mortgage side, talk to us about that.
Yeah. So the loaded question. No, of course, it's a lot to talk about, I think, right now. The market, so kind of two sides of the question, one from the loan origination side and what's going on with mortgage rates. I think the market, over the past few months, beginning of 2025, has mirrored the same volatility we've seen over the past few years, which on the rate side, that tends to influence, purchase demand. So mortgage applications, can tend to fluctuate as the cost of buying a home, affordability for new buyers changes. And sometimes it can change drastically. So we've had some unprecedented moves, within a short period of time. But overall, mortgage rates have trended around that 7% range. 7% and under is generally what we're seeing across the market, for your typical 30-year fixed type loan. But with that, I think that as much as the demand can fluctuate on the mortgage application side, I think, and Dave, curious on your perspective too, but the market's definitely still moving along. There's still competition on well-priced properties in nice areas that are in good condition. And I know from even my experience in properties I've offered on for my personal portfolio, there's definitely other buyers out there. So as much as there's a lot going on in the market, I think with the right education and resources, you can, just like you're doing with your landscaper, you cut through the noise, right? And you find the opportunity. So a lot of my investor clients are still buying real estate, and a lot of first-time home buyers are as well.
Yeah, I think people are just having to get used to the the rates are higher now. That's it. When I bought my first house, it was 6.5%. That was in, I don't know, like 2004 or something. And that was a good rate. Yeah, seven's a little higher, but 6.5 was great. And so I think we
Absolutely.
got spoiled. And to be honest, we'll never see 3% again, unless we see something like COVID again, I guess, right? I mean, really, that was a product of that, because that's just not normal and it's not healthy. And when things like that happen, it unfortunately they were trying to trigger people to get out there and buy houses and start spending again, which is good. And I think it did what it was supposed to do. But the challenge is and this is what I see. A lot of people kind of thought, okay, well, here's the rate now, and I think people are still waiting, like thinking somehow we're going to get back to that. I personally don't think we'll ever get back to that, but I don't know. I'd love to hear your thoughts on that.
Yeah, of course. It's definitely a readjustment in this the sentiment. But I think I don't foresee rates getting back to that level um, in the foreseeable future at all. I think, as you mentioned, the only way we get rates back to where they were in COVID is another COVID type event. National financial crisis, global pandemic, which is what it took for rates to get to 2%. And what's funny is as I talk about that with people in the office, we joke because it's, of course, mortgage originators do a lot of volume typically in lower rate climates, but I wouldn't want 2% rates because I wouldn't want whatever event it takes to create those again. So I don't think we're going to see that for a long time. I think, as you mentioned, it's adjusting to the new normal of where interest rates are. And it's a concept that's difficult, I think, for a lot of new buyers. The average age for a first-time home buyer is on the decline. Younger people are buying houses, which is great, but they don't have a reference point. The time at which they tuned into what's going on in the real estate market probably was in 2020 or was in 2021. When real estate headlines flooded the market, there was a lot going on. Every newspaper had some article about something related to the mortgage or real estate industry because there was a lot of activity. So that reference point that they have is COVID, which was obviously an unprecedented, abnormal time. But in that same conversation, what I think is important for people to note who are thinking about buying a house is the impact of the interest rate usually isn't as significant as you think. And this was actually a conversation I was just having with a client before we got on the call today. Interest rate we were looking at was two different interest rates. Rates have moved over the past few weeks, and we were exploring different options. So the rate we had started with was 6.125. The rate we were talking about today was 6.5%. So almost a 0.5% different, right? About 0.3% different. He's borrowing about $430,000 or so. Now, if I told someone on the street or someone who's not familiar with real estate financing, your interest rate's going up almost 0.5%, their immediate reaction would be, whoa, my payment's going to explode. There's no way I can afford that. Once we looked at the actual numbers, the difference was $100 a month. So, of course, that's not insignificant. If you're budgeting for your life, $100 a month matters, sure. But it's not hundreds of dollars a month. Your payment isn't doubling from what you probably thought it was going to be. 0.5% fluctuation in rate might just mean you adjust your budget by $10,000 or so in price point. So I wouldn't let the interest rate alone deter you from starting the process. I'd rather quantify the numbers and see if it's an impact that you can manage, because oftentimes it's not as significant as you think.
Yeah. Yeah, that's a good observation for people listening, because you're right, it isn't. And again, I don't know if you've ever read Gary Keller's book,
No,
the Millionaire Real Estate Agent.
I've heard good
Um,
things, but I have not.
so in the book, he has he shares the stages of the market. He calls it, actually, I'm sorry, it was the book, not the real estate, the book Shift. The name of the book is Shift. And he talks about stages that people have to go through whenever a market shifts. And the first stage is denial. And I see this all the time with sellers, and we're seeing it now because things are starting to. I'm not saying the market's like slowing down because inventory is still low, and so supply and demand is king when it comes to real estate. If there's no supply, then no matter what, it's just things are going to sell when they come on, right? But we are starting to see buyers maybe backing down from the higher prices. So the what happens now is the seller that could sell his house, a year 2 years ago, he put it on, he'd get multiple offers, 25,000, 50,000 over asking. That's not happening anymore. And so they're denying, well, hold on, you don't know what you're talking about. That's not true with my house. But then the second step now is what's anger. This is what he walks us through. So that first they deny it, then they realize it's true, and then they get angry. Oh, these agents, these mortgage guys, now they're upset. But then the third step, and this whole process, he says, takes about maybe 3 to maybe 6 months. The last step is acceptance. Now they're just accepting, okay, this is the new norm, this is what's happening. And they're gonna, I mean, it's a fantastic book. You read Shift. Everybody listen to this if you haven't yet, because the market's always shifting. It's shifting up, it's shifting down. But I feel like that's where we are right now with sellers, Ryan. You're starting to see more price adjustments. Some people are taking houses off the market. You're starting to see buyers say, okay, I get it. It's 6%. Let's just move forward. I mean, what do you think about that?
I think you're absolutely right in a couple facets of that. I mean, it's difficult for people to go through change, number one, in general, but it's even harder when they don't understand the change. So I think for sellers and for buyers who might have those preconceived notions about the market, like, wait a minute, it's not a good time to sell. I saw this article on, CNBC, and it says home prices are down. People are very quick to look for a reason to say no to something.
That's right.
And that, I think, is part of the reason we have some of this hesitation in the market. Is just that's the way human beings are programmed, is to look for, danger first. They look to say no before they say yes. And a lot of times I think people get lost in the headlines. Headlines are meant to sell newspapers, not inform you of the actual nuts and bolts of the article. So I think we have a lot of that playing into the decision making and emotions of sellers and buyers right now, and more than in markets past, I would say. Obviously now information is so accessible, and usually in short information stints. You watch a 30-second reel on Instagram, and you watch a few of those, and next thing you know, people put real estate investor next to their bio. Obviously that's an extreme example, but people take information in shotgun type style. So I think it's all the more reason why people should talk to professionals, like yourself and like a loan officer who's in on the market, so you understand what's going on in your specific market, because every market is so different. And break it down to those fundamental components of why are you moving? What is your monthly budget? Yes, interest rates impact your budget, but let's find that budget for you and see if we can find, a property that fits that. So I think people get overwhelmed pretty easily with all the headline news, and they go quick to that deny stage. They're like, oh, wait a minute. Real estate prices are going down. So.
Well, I think you nailed it, man. And I think the thing that you said, the underlying thing was right now, and find the motivated people. And it's not just, I mean, it's always like that, but right now, I think it's even more important because there are fewer people. So it's really critical that we get out there and find the motivated. And just this landscape guy, he's like, I feel like he's right in front of my window, just going back and forth.
I can't hear him.
Okay, that's good. That's good. Maybe these things are doing a good job filtering it, but so it's distracting to me. But the point I'm trying to make is we have to focus on finding people that are motivated, people that are qualified, and people want to do business now. Otherwise, we can just waste a lot of time and spin our wheels. And I just unfortunately see too many real estate agents out there doing that right now. And then, so why don't, let's do this. Let's give, as we start kind of winding down, let's give our listeners a couple strategies on like how to get prepared. Like what are some things they can do now to really keep things moving and find those people. What do you like? Somebody calls you and says, "Hey, I'm thinking about buying a house." What's the first thing you tell them?
Yeah, that's a good question. This is what I talk about a lot, my podcast and in general as well, is just like if your knee was hurting, you wouldn't go on Google and start researching why don't I feel good today or what's wrong with my knee, because you're not going to get the right answer. And you shouldn't do the same thing when you want to buy a house. I think my advice is always the same. Talk to a qualified professional. So in that instance where someone says, look, I'd like to get pre-approved, or I want to buy a house in the next year, I think the misconception is that you have to be ready to buy today to talk to a loan officer or talk to a real estate agent. People are like, I'm going to buy next year, so I'll reach out when I'm ready. That logic, I think, is flawed, because if you wait until next year, one, you could have missed opportunities, and two, you might have been ready last year, but you didn't take the step to actually get the right information. So I have those conversations all the time with people where they call me and they say, look, I want to buy a house next year. I say, great. Why don't we take a look at things now, superficially? We don't have to do a hard inquiry on your credit. I don't need to get all of your documentation, but let's size up some options for you. And many times that conversation turns into, wow, I didn't know I was in this good of a position. Oh, I didn't know I could get $25,000 in assistance to buy a house in Massachusetts. I didn't think I qualified for that program. Or the inverse happens. Wait, I didn't know my credit score was a 600. What happened? Oh, you didn't pay your Kohl's card last month. What? So let's fix that, right? We got 12 months. Let's get a plan together so that next year you are ready. But had we not caught that, you wouldn't have been, we wouldn't have had the right plan in place, come next year. So I always say, talk to a qualified professional, talk to a loan officer, talk to a real estate agent. It's never too early to start, the planning process. And I always say the worst thing that happens, I confirm you're in the exact position you are. Best case scenario, we pick up a few pointers you can take to make things even better for you, or we actually determine you can buy today. So let's set you up on a search and you can passively look. You don't have to go look at a house every weekend necessarily, but at least you know what you qualify for and you've got the right information.
Yeah, I think that's really, really sound advice. Absolutely. Personally, when I don't work with many buyers. However, when I do, there's some things that have to happen every time. And if they're not willing to do it, it's fine. We just don't work together. It's the same thing like when I take a listing. If the seller wants me to list their house, they have to sign a listing agreement. If they don't want to sign a listing agreement, I don't care how nice their house is and how much they give me fist bumps. We have to sign a listing agreement. So why would a real estate agent, ever work with a buyer without an agreement signed, right? Or why would a buyer ever work with a buyer without them qualified first, without them going out, talking to a professional like Ryan or someone else and getting a letter in place? But we see people doing it all the time. So I don't know, Brian. I mean, I think that's probably one of the mistakes I see. Just wasting time with unqualified, unmotivated. That I would
Right.
say that's one of the biggest mistakes I see. What would you say? What's one of the biggest mistakes you see out there in our space right now?
It's a great question. I have obviously a little bit different of a lens than you I see things from the
Sure.
back end. But I think if you ask me overarching, what's one of the biggest mistakes I see people make, and I think from the agent side or business owner side, it's not taking control and recognizing things like that. Qualifying your time, qualify your prospect, right? I know you talk about that in your sales course. That's a big component. You want to make sure the person you're talking to is qualified to do the business or service you're offering. And I think that's one thing I see making a lot of people spin their wheels. As even on the lending side or the mortgage side, they're pursuing avenues of business that might not be a best fit for maybe their products or maybe their type of service, or their personality. I think that's important too. Not everyone, works well together. So I think it's not qualifying, your referral sources. They're not chasing different types of business, but fundamentally it's just being consistent with whatever, business practice you have. I think a lot of people in today's day and age, they don't understand that it's not just one day, it's every day. And I'm sure, I know you talk about that too a lot, you did at the event that we put on earlier this year. And it's not just one follow-up, it's every follow-up, and it's having a good message to bring. So I think a lot of times people think, and I'm sure you're a realtor, I'm sure you get lenders to go, Dave, let's grab coffee. And you're like, man, you may not even like coffee.
I don't, yeah.
But,
I don't
so
mind
rather
coffee,
than do that, I want to come to you with something, something of value. Hey, Dave, I saw your listing online. I got some marketing material for you. Look, I don't want to ask you out for coffee. Just say, hey, nice listing. Let me shoot you some flyers. Feel free to post these if you like. Have a nice day. Whatever the case, just rather than me reaching out to take some of your time, you got to have some value. People are looking for things that you do. So
thank you. Good study you are. That was what we talked about in the workshop about, having a reason, an intention behind every reach out, and be different every time, right? Like, so be purposeful, provide value.
Yeah, that's when I started implementing more after your conversation.
Awesome. So. Well, I appreciate that, man. Thank you. What do you, so it's kind of, when it comes to like, like the mortgage loan originators, I mean, a lot of them are entrepreneurs, they're salespeople. What would you say are the biggest mistakes you're seeing that they're making?
The loan originators are making?
Yeah, the LOs. I mean, I hate to, I don't want to discount, but there's just as many real estate agents, right? Like there's this joke, like when we're born, we get three things, right? A mother, a father, and a friend in the real estate business. Like it's kind of just old joke, but I feel like it's similar with loan officers, right? There's so many. To that point you made about calling, hey, you want to grab a coffee? No, I don't want to grab a coffee. But what are some of the mistakes you're seeing them make, and how can they get beyond that? And not just for LOs, but no matter what business you're in, listening to this right now, I want you to think about how this applies to your business.
That's a good question. I think in my personal business, belief, as far as originating, and you have to understand what your business partners are looking for. And everyone is different. And some loan officers get along better with some realtors. They have a different style of doing business and a different style of satisfying what that other person's looking for. Some agents love, I call it the sizzle. They love that marketing flyer that comes out, new program, new highlight, new this. It might not have any real information. You're giving them a tool. They don't know how to use it, but now they can say, hey, I got this hammer, it looks shiny, it's new, and they can send it to their clients. Some people like a lot of that stuff. Other real estate agents, they just want someone who they know when they get a pre-approval, that loan's closing. They want someone who picks up the phone at 8 o'clock at night or 6 o'clock in the morning, and they've got a resource with a fast answer that they can bank on. And so I think a lot of loan officers don't find who they are first, and they chase business that they probably would have no chance at getting if they chased it forever. So recognizing who you are, what value you bring to the table, and try to align that with the prospects and the business partners you're chasing. And for me and myself, I try to do a little bit of both, but fundamentally, my business proposition, I tell all my agents, I'm your insurance policy on your commission check. If I give you a pre-approval, we're closing, without a doubt. And any answer I give you, if I don't know the answer, I will tell you, so I can get you 100% yes. And I only give out 100% yeses. I don't give out yes with a sweat dripping down my back. It's a yes. Yes, we can close this date. Yes, this buyer's approved. Yes, I vetted them. Yes, I'm confident. So that's my value proposition. Of course, as new programs come out, my goal is to educate, right? And I'd rather be someone who, instead of giving a marketing flyer, says, hey, here's a quick 60-second video, and send it to my agents. Hey, look, new mass housing program changes came out. income limits went up by 10%. If you had some buyers in your pipeline, it might be good to reach out to them if they weren't someone who got pre-approved last time. And then that might
Mm,
spark an actual reaction from your agent. Rather than sending them a flyer on an email drip campaign, bring some value to the table. Here's how you can use this information I gave you to help your business. So I tend to be a little bit, I would say, more calculated with some of that stuff. And I think I see loan officers do that a lot. They don't know what value they bring, and they chase business that they wouldn't have any, chance of getting.
mm. Yeah, it's more of a shotgun approach, like a buckshot shotgun. It's like as opposed to like sniper approach, right?
Yeah,
I,
and you
I,
see it. I'm sure. I'm sure you see.
yeah.
You
Oh,
get emails.
all
I'm
the
sure all the
time.
time. Here's a new fancy flyer, and you're like, you probably. I mean, maybe you read it, but you probably click past it.
Well, it's kind of funny because I don't know how long have you been doing mortgages?
About 4 years full time.
Okay, got it. So you don't really know me from when I was running my team at Keller Williams, but my team was Jim Black, Michelle Wesson. Like I brought all those guys into the business, and they're all like top producers now. So a lot of people don't know that my about me. Like they see me come in as like this new guy, and that's cool. It's fun, but you go from being like the top team that used to get the top team award every year to like a like I don't want to say a nobody, but like nobody knows who you are. Some people do, but it's a lot of new people in the industry now, which is cool. Like you, Ben, and I met, and Ben's a rock star, and a lot of others. And Lamaki is obviously still doing his thing. He's always been around doing his thing, right? But it's always been critical to have the right group of people around you. The right, and that's what helped us be like having that, like you said, like the mortgage partner that I know if I get a pre-approval from this person, like I can confidently say to somebody, listen, with conviction, if you get a pre-approval from this, you know that closing costs are going to be what he says. You know you're going to be able to close. Everybody else knows that. We got to get you set up with this person, right? Like you
Absolutely.
want to be that guy, and you are that guy, right? Because I see what you're up to, and I want to do more business with you moving forward as well. But I think that's really, really important, and not just the realtor, but the I'm sorry, not just the mortgage person, but the attorney, because the wrong attorney will kill your deal as well,
Absolutely.
right? And then having a great insurance person on your team, and having a few inspectors that we can say, hey, here's a list of inspectors, and here's three or so that we know we can trust, and that's super, super important.
Absolutely. Absolutely. You have to rely. That word or vote of confidence. It matters. How confident you can be on the phone as you voice those questions and answers. It matters. And one thing, I do a lot of times when my clients submit offers is my agents will say, hey, do you mind calling the listing agent just to vouch for the client? Of course. And I always end the call with, the same thing. Rest
That's
assured,
right.
if this is the offer you go with, I'm absolutely confident we can close this for you and we'll close on time. And the reason that statement's impactful isn't because of the words, it's because of the due diligence we've done to say it with confidence. I know when I say that, I mean it. I know we can close this loan. Absolutely. Your commission check's safe with us. We got you covered. And that means a lot. So I think if you don't have the right team in place, it's hard to have that confidence. And that shows a lot of times in how smooth the transaction goes. If you don't have the right real estate agent, I mean, that's obviously fundamental. Even on the front end, you might never get an offer accepted and you just don't have the right people.
I can't believe these guys are still inside my way. We're going for 38 minutes. They're still, I mean, my yard's not that big. All right. So, and we're going to kind of wrap it with
Sure.
this, though. Networking. I've always been I built my business on cold calling my whole life, 36 years sales. But the last couple of years, man, networking, I really have gone all in on it. And it's just really made a big difference. I know a big part of your business is through your networking group, and talk about how important the network is in networking.
Yeah, absolutely. It's everything. But how you do it matters. If you don't if you're not intentional with your networking, or you're not consistent with your networking, consistent with anything, but if you're not consistent, there's no point in doing it. You're going to one event one time in a given year is not going to change your business. Doing anything one time is not going to change your business. If you want a six pack or you want to do an Ironman, you can't go to the gym once. You got to go to the gym every day. So it's the same thing with networking, I think, and you got to be intentional. I love the gym analogy because I think it translates so well to business and to real estate. But you can't, if you're going to the gym, that's a good start. You're consistent. You're showing up every day. Go to the events. Be there. But what are you doing when you're there? If you want to get stronger legs, if you're on the bench the whole time, your legs aren't going to get stronger. So it's the same thing with the networking side, and something I'm trying to get even better at as I go forward and always improve. But being intentional at those events, making sure I actually get time to talk to the right people. And if it's a monthly occurring event, get to it every month, get to it every other month, but be consistent and be present and use your time wisely and intentionally to make those connections. And then what do you do after? That's I know a huge fundamental of your business career is being intentional with connecting with people. If you meet someone, and I know I'm guilty of it, I've got a drawer right here full of business cards. How many of those business cards did I actually do something with?
It's funny you say that.
But those connections that I have made have fundamentally, changed my business.
Got one, two. I got 6 of them right here.
Yeah,
but you know what? They're here. They haven't left my desk yet. So
that's a good sign.
So important. All right. So I want to let people know.
Are you there?
Yeah. You know what? There you go. My rookie mistake. I just removed myself from the podcast. How's that? So here's what we have a product, a new product called Ringleader, and what we can actually do now is we have an agent that will make outbound calls for you and will handle inbound calls, so you never miss a call again. So I want you to check this out. I want you to call this phone number and test it out for yourself. The phone number is 774-214-2076. I want to ask you, seriously, stop, write that number down. Ryan, this is for the listeners and you as well. But write that number down right now, wherever you're at, 774-214-2076, and test it. Ask it whatever question you want. Do whatever you want. This is an AI. And then I want you to imagine that as part of your business. So when somebody calls into your business, you'll never miss a phone call. Or if you want, you can even implement it to make outbound calls for you. So I want to let you know about Ringleader AI. You can also go to the site, which is ringleaderai.net, which is the sponsor of this podcast. Now, Ryan, I want you to tell our listeners how they can get in touch with you as well if somebody wants to check you out and do some business with you.
Absolutely. Best way to get in touch with me is through Instagram. So Finance with Team Richards on Instagram. You'll see a lot of content on there. If you shoot me a DM, we'll definitely find a way to connect, and you can follow along with me and my journey through there. So
awesome. Brother, give us final thoughts on the conversation today. What would you say was the if somebody just chimed in right now, based on our conversation, what would you want them to walk away with?
My closing thoughts. I mean, we talked about a lot of good things, today, Dave, and I think it comes down to a few kind of key notes. One being, if you're a professional looking to expand or grow your business, it doesn't matter your marketing plan, your ad budget, or what products you have if you don't have a consistent plan and follow it consistently. So I think consistency is obviously a major key in growing and scaling any business or sales practice. And being intentional with your connections that you make, making sure you value the people that you surround yourself with in your business network and the people you choose to team up with, especially on a real estate transaction. If you're going to enter into what is for most people, the largest purchase of their life. You want to make sure you've got a rock solid team, from agent, lender, attorney, home inspector, to get things done for you. And real estate aside, same application in many other fields. So make sure you've got good people to help you get the job done. And then final thought, I think we definitely talked a lot about systems and making sure you have the right systems in place. And my recommendation, in coming from someone who didn't implement this is hindsight, right? Hindsight's always crystal clear. But put your systems in place when you don't feel like you need them, because that's the perfect time. Everyone has that moment where like, oh, I wish I had an assistant right now. It's too late. You're too busy to go hire an assistant. You still should do it, but you could have done it, when you're a little bit slower, and you would have been ready to keep the momentum rolling, as opposed to, take a step back to reassess and reevaluate. So
Amazing, man. Well, I appreciate you today. And yeah, I think you nailed it. You started with consistency. You hit that. We talked about being intentional with our outreach. We talked about having the right team in place. And we talked about systems. And I think when you do all those things, you can achieve that thing that you shared in the beginning was a generational legacy. No, it wasn't generational legacy. It was what was it? It was a
generational wealth.
generational wealth, but you also mentioned legacy, and I love legacy, man. So we appreciate you, brother. Thank you for joining us today. And I'm looking forward to being on your podcast as well. So we'll have to make that happen. We'll figure it out.
Absolutely. Thanks for having me on, Dave. And yeah, we'll continue the conversation with spinning on your end coming soon. So
Looking forward to it.